Understanding the market structure is the most difficult task you need to know how to do if you are a forex trader. All right. Think of it. Are you a trend line trader? You need to understand market structure. Are you a breakout and retest trader? You need to understand market structure. Price action, support and resistance, chart patterns like candlestick and so on. You still need to understand market structure. So it's more like you can never do away with market structure. So how do you read market structure? There are different ways to read market structure. You can use higher highs and higher low to read the market. You can use lower highs and lower lows to read the market. You can use swing highs and the swing low to read the market. You can also use the chart patterns, which is the rally based rally, and my favorite is the BOS. These are the things that you need to know how to do if you want to know how to read the market structure. Now, the thing is this: understanding the market structure. I want to be making this as simple as it is. You know me now, I make things easier for you. Let's continue. Now, I will not be using higher highs and higher lows to identify this market. I will not be using lower highs and lower lows to identify this market. I will not be using swing highs and swing low to identify the market. I will also not be using the chart patterns to identify the market. What I will be using is just BOS only. You need to know the concept of BOS. What is BOS? Break of structure. What are you trying to understand? You're trying to understand structure now. Then what is BOS? Break of structure, which means BOS and the structure itself, there is correlation between them. So if you understand BOS, automatically you have understand the market structure itself. So now, I don't want to waste too much of your time. Let's dive in. Like I said, I'll be using BOS to identify the trend of this market. This is the layman example you guys normally see. Market moving on, moving down, But normally when you go to the market, this is exactly what you see. All right. You see, this is more realistic price level, price action than this. This is too plain, too easy. Assuming market is always moving like this, trust me, everybody will be making money. But realistically, this is what we see. So let's try to use the concept of break of structure to identify this. By now, you already know what is this. This is a break of structure, which means market is absolutely moving in the up direction. We are looking for buys. What is this? This is a break of structure to the upside. Trust me, this is exactly how I understand or I identify my directional bias of the day. Then what exactly is this? This is absolutely a break of structure. Now the question is, did we have any other break of structure to the upside? Someone will mark the chart like this. No, you don't. You focus on the most recent price action, the lows and the highs. And if you take a look at this low was actually violated, giving you a market structure shift. Then what do you have now? This is a break of structure to the downside, which means market has successfully shifted from up movement now going to a down movement. Now you can see this is how I read it. I don't need to see higher highs, higher lows, lower. No. I just want to see break of structure, multiple break of structure to a particular direction to confirm the trend. And again, I need to look at the momentum and the order flow of the market. So now what do we have? We have a break of structure. After that break of structure, do we have any other break of structure to the downside? No, we don't. But what about the high that caused that break of structure? This is it. All right. There is what we call internal and external concept. You might have, okay, let's continue. Maybe the next example, I'm going to be showing you guys that. So this is a market structure shift. Very easy to read. Then this is a break of structure to the upside. The best way to confirm a trend has changed is to wait for a break of structure after a market structure shift. So from a down movement, market is now moving up again. So we went up, down, now we are going up. Now this is Very easy and simple price action. But what about the realistic price action? Looking at this, how can you tell? If you see, I should look at this now. This is already some kind of a consolidating market on a higher time frame. But do you know that inside a consolidating market, there is still a trend. There is still an opportunity for you to take a trade. But the thing is, you have to make sure you are analyzing the market on a higher time frame. One of the best time frame to do your analysis as a day trader is 1 hour, not 4 hour. But you can do your analysis on 4 hour. Daily time frame, I don't recommend that. Just to look at the trend. But still on still, let's analyze this market using break of structure. All right. First thing first, what do we have? What do we have here? Hold on. Okay. Let me just try again. Now, what can you see here? This is a BOS, which means break of structure to the upside. I'm only using break of structure. Now, like I was saying, internal and external concept. Internal and external concept. Normally, what is internal? Internal means inside the range. What is external? External means outside the range. Looking at this region now, you might say, this is a market structure shift. Market is going down, like trend has changed. You are wrong. You are wrong. But this market structure shift is valid, but it is for the internal. The only way a trend has changed is when this swing low has completely been broken, break and close. That is why you say that is why you say an external market structure shift has occurred. So I don't want to stress you with internal and external. You just want to carry your cursor, mark the line. This is not a break of structure. This particular place here, this one, not a BOS. Please understand what is liquidity sweep. Assuming this is what you are trying to mark, or the market went up like this, you are trying to mark here. This is automatically becomes a sweep of liquidity. But market gave you a break of structure. No matter how long the break of structure is, mark it out. Now, where is now your swing low? You don't want the market to break. It is this one here. Market never broke. It is not this particular one, because this, your swing low is not this particular one. It is not this one, because this is the lowest market went to before making that first move to give you a break of structure, which fails. It came back, then give you a final break of structure. But assuming you want to mark your demand zone, not a swing low, this is how your trade should have looked like. All right. This is how, let's say, for example, this is a 15-minute demand zone. This is how your trade should look like. You enter from this demand zone, not this one, but this is your swing low. That is why sometimes I tell you, when a demand zone or a supply zone is being broken, your setup can still be valid, except the swing low is completely broken. Now, after that, what later now happened? We have a break of structure to the upside. Now, where is now your swing low? You don't want the market to break. Your swing low is this low that market went to before giving that move to give you a break of structure. So if you notice, market give you a market structure shift. You can see how we are reading the market with just a break of structure, right? After that one, what do you notice? A break of structure to the downside. And make sure you are doing this on the 1 hour time frame. Now, this is not a market structure shift or to tell you that a trend has changed. This is an internal market structure shift, especially when a higher time frame supply zone has not been mitigated. All right. After that one, what did you see? This is a break of structure to the downside, telling you that, okay, we are still going down. And where is now your swing high? Your swing high is this high that caused the break of structure. And if you notice, market gave you a market structure shift externally. And after that, you have a break of structure. So if I should ask you now, assuming you want to take this trade, what are you going to be looking for? Is it buy or sell? Is it buy or sell? Obviously, you're going to be looking for buys. And if I want to take this trade now, where is your swing low? Your swing low is this low. And how many zones do you have? How many other blocks are there? There is one other block here, and there is another other block here. Now you might ask, which other block is going to hold? Nobody knows. Usually, Market can decide to react around this first demand zone, or market can just choose to react around the second demand zone. Now the thing now is just wait and patient. Allow the market to come down on a lower time frame, like 5-minute time frame. Once you did not see a market structure shift when the market comes to this zone, just know this zone is not going to hold. Market is going to react, then it's going to sell down to this other zone, later give you a market structure shift, then buy up. But if you see the market structure shift on this first zone, there is high possibility that this first zone is going to hold, then pull back, then you buy up. It's just simple, just the way. Now let's go to let's take the same example. This is gold, 1 hour time frame. I took a trade on gold, hit full TP, and this is it. Yeah, like we said, 2 demand zone. Let me go to the 5 minutes time frame. You can see this is my view on the market. We have 2 zones. Just like I said, market can decide to respect the first zone and just disrespect the second one, or the market can just choose to come and respect the second one. But looking at this example, market respected the first one and disrespected the second one, despite the fact that there are a lot of liquidity that needs to be swept. You can see. And again, following the rules, this is a counter trading. If I was supposed to go to the 1 hour time frame, this is a counter trading, and all that liquidity that is still stacking there, market will come and sweep it. So I'm expecting gold to buy a bit, then sell to this demand zone, look for a market structure shift, then buy up. This is exactly my view. But let's use the demand, the breakout structure we have been talking about. You can see how I have been. If I say, let me ask you, what's the trend of this market now? Are you going to be telling me buy, sell? No, the momentum of this market is 100% a buy market, which means the only opportunity you should be looking for is buying opportunity. But what I did is counter trend. So instead of buy, I was selling because I know exactly what I'm doing. But first of all, let's look at the trend. The trend is up. And let's start from, hold on, let's start from here. I think this is where I started the analysis on. This is on December, last year, December. This was a breakout structure, like we said. And this was internal market structure shift, not external, internal. The external market structure shift happened when the market breaks this particular high here. All right, that is an external. But with the internal, you can easily pick your buy. Assuming you are looking at this should be your trade. Normally, this is on 1 hour time frame. We don't take trade on 1 hour time frame. We use it to analyze the market. So this should be your trade, your view using demand. Now, I'm not teaching you how to take trade now. I'm just teaching you how to understand the structure of the market. So if you want to learn more, ensure you follow this channel, or probably you check out the course content in the description of this video, or probably you can get the demand and supply book. I think I still have, let me check it. I think I still have the demand and supply file, which we are using to analyze the market. So just hold on, let this load up. With the demand and supply book, you should make sure that you already have the, this is it. You should make sure you already have the basic knowledge of order blocks, breakout structure, swing highs and swing low. So if you just need the book, this is the demand and supply book, the strategy. Check out the link. All the link will be in the description of this video. And again, if you are just looking to grow your capital, I have a program for you. The 5 online business you need to get a trading capital is still there. That is exactly how I fund my trading account. Now, looking at this with the external and internal concept, we have a market structure shift that is now confirmed. That trend is about to change from the downside to the upside. Now, if you're still not convinced, then wait for a break of structure. This is to confirm that trend has changed. Despite the fact that this is on 1 hour time frame, there is still an opportunity for you to take trade on the lower time frame. These are all opportunity for you to enter the market on the 1 hour time frame. You know, this is on on the 5 minute time frame or 15 minutes time frame. This is on 1 hour time frame. Market will not be too clear except you go to the lower time frame. After that, what did you notice? We have another break of structure. Market came close to this, market reacted to this demand zone, which gave you a market structure shift around here on the 5 minute time frame, which is your entry confirmation to sniper this trade immediately when the market pull back around here. See, if you don't know any strategy, just go and master demand and supply. Just master demand and supply, or try to get this book, which is here, or join any academy that teach you demand and supply. Demand and supply is the banger. Now, after that, I have been taking trades on gold. I believe I deleted all the analysis. I've been taking trades on gold. After that, what did you notice? They were having two zones here. I don't think I took this trade. There were two zones here, but normally gold likes to react around the first demand zone, the first order block, and disrespect the second one. This is exactly what happened on the recent trade. You should have been able to take the trade here, stop loss below, then you target up. Now, after that, what did you know? And now this time around, market is a bit tricky. There's a break of structure here, and there was a market structure shift. Just because the momentum is still massively bullish, market find a way to realign itself and give you another market structure shift. But I like to call it a break of structure, which is realignment. Continue going up. Now, after that break of structure, you have another break of structure here, which market pulled down and never came. Normally, you'll be facing things like this. Market never came to this demand zone. So what you have to do is to let it go. Don't stress your life. After that, we have the most recent break of structure. Now, you cannot be calling this entire region a break of structure now. It's not possible. On the 1 hour time frame, that is a pause in the market, not even categorized to be seen as a break of structure, as a pullback or a retracement. So that means that the valid retracement is around here. So I'm expecting to buy. For me to say that trend has changed, I want the market to come and break this low. Then I'll now say, okay, fine. I will no longer be looking for buying opportunity, and now I'll be looking for selling opportunity. So when I saw this, for the market to now buy, to now sell all the way to this zone here, it's going to take a long time, and that's a whole lot of pips. Now, if you measure it, you will see that it's a whole lot of pips. So I was looking for opportunity to counter the trend. So I went to the 5 minutes time frame. On the 5 minutes time frame, what do you have? This is the most recent break of structure on the 5 minutes. Every time frame has its own analysis. After that break of structure, I mark out the swing low that caused it, and market came close to it and reacted around it, but never push up. Then it broke it. Immediately broke it, I went to the 15 minute. The 5 minute zone was too small for me. I was looking to take the trade here, but I was too scared because the zone was too small. So I used the 15 minute zone. And here, if I want to mark the 5 minute zone, it's going to be too small. And gold react around a fair value gap, not other block. So I just mark it out. Initially, I was targeting this low as my first take profit. When the candle came close to it and hit the TP, I noticed the momentum. So I look for the next possible region, which the market can sell to, which was this one. So I hit TP around 1:5, which is approximately going to 1:6 reward ratio. So this setup now is automatically invalid because I'm no longer interested to take the trade around this region. So that is exactly how I use demand and supply, which is exactly, this is my strategy, using demand and supply to trade the market. Everything you need is inside this book, but not for beginners, because if you're a beginner, you're definitely going to be finding it difficult to understand what exactly is written inside this book. And this is exactly how I was able to take trade on gold. Normally, you are not expecting to be hitting TP. I think I hit SL on Euro USD. This is it. You're not expected to be hitting TP every single time. I hit TP once. I hit TP the first time. And then I'm not supposed to show you this analysis for in order not to make this video too long. And I hit stop loss, but this happened because of this liquidity sweep here. This happened because of this liquidity sweep, and immediately the market swept me out, but my analysis was correct. There's difference between when your analysis is wrong and when markets sweep your stop loss or orders in the market before going your direction. I noticed that this 15-minute zone is still holding the price and my analysis was correct. So I went in for another sell, which hit take profit. I risked $100 here and I made 1:3.23. Then I recover the loss and make more profit plus the one I took on the XAU USD. So I want you to go and back test exactly what I've taught you here and let me know in the comment section if you tried it and if it works for you. Don't forget to subscribe. See you in my next video. Cheers.